In the money line tonight, stocks soaring on upbeat consumer confidence, strong earnings. The Dow gaining 115 points, closing at the highest level since June of 2008. The S&P up 12, hitting a three-year high as well. The Nasdaq up 21 points to its highest close since October of 2007. Ford, 3M, UPS all reporting strong earnings, driving prices higher. Ford, its best quarter since 1998. Advancing issues beating on decliners by about 3-1 on the New York Exchange. The news, however, not all positive. Online movie rental company Netflix today was hammered. Netflix issued a weaker outlook for the second quarter. The stock seeing its biggest one-day loss ever, down nearly 10%. After the close today, Amazon with a big miss on its earnings, missing targets by 16 cents a share. The stock taking a hit in after-hours trading. Which brings us to tonight's Market Masters. Joining me tonight, Harvey Eisen, CEO of Bedford Oak Advisors, Tobin Smith, Chairman, NBT Equity Group, Fox News contributor. Good to have you both here. Let me start with you, Harvey. This is a market that has been, a lot of people have been looking for a correction here. It's seemingly a torrent that has no shutoff.
You cannot make this up. If I would have told you what the news was going to be at the beginning of the year and said, what do you think the market's going to do? Now, let me see if I got this right. Japan is toasted with this horrendous problem. Europe is done. The Middle East is a disaster. The dollar is worthless. You can't make this up. And the market goes up every day.
So you didn't foresee precisely this outcome?
No, when I was on with you last time, I did perceive it. People said, you've lost your mind. Do you read the newspaper? I said, try not to.
Absolutely. And tell me, what do you think? I mean, this market today showed some kind of strength in the face of, on the stock of, if you will forgive the expression, on the stock of some good earnings and a rising consumer confidence. What do we got here?
Well, look at it in the short term, Lou, like 24 hours short term. Nobody wants to be short ahead of Bernanke. They assume that whatever he's going to say is going to do it. And remember, he's moved the magic wand, and the magic wand is, if I make every other asset look cheap, stocks are going to go up in value simply because there's no place to go. He's accomplished that. The question tomorrow I keep thinking about is someone in the press going to stand up and say, so how the hell do we get out of this mess, Dr. Bernanke? And that's the one I want to hear.
Who do you say? Well, I'd kind of like to hear that myself. I'm not sure who's going to be the first to deliver that inquiry.
Maybe their last day on TV, but it would be fun.
Well, I don't know. I think on some networks that person might just be a hero, But and I'm thinking of something close to home.
Sure.
The idea that there was no secret that this Federal Reserve Chairman was going to make bonds singularly unattractive and stock prices therefore attractive. But where are we now? I mean, what can the Fed do? We've got a few $100 billion to roll still on QE2. I love that QE2. Yeah. We still have a monetary base that has just been bloated. And yet we are not seeing significant effect in the markets, do you think?
No, I mean, you've got really two worlds. You've got the financial world where bonds are a huge bubble, right? Huge bubble. You've got stocks that keep going up because they benefit from this. The other side is 1 out of 5 people is either unemployed or underemployed. Talk to people on the street. Ask them what they think about the economy. This is an amazing debacle.
And it's a debacle, Toby, that this may seem like a familiar question to you, Toby.
Yeah.
How do we get out of this mess?
Well, I just want to say to Harvey's point, the first thing I learned in the market a few years ago was that you never want to confuse the economy with the stock market. I mean, the stock market is a system to try to figure out where we are 6 to 9 months from now. The economy is where we are today. How we get out of this part, Lou, is not only the $64 trillion question, but the first way we start getting out of it is to have the Federal Reserve come out and lay a pretty specific ground plan of how we do this. And Bernanke feels, academically more than anything else, he knows in his mind exactly how this is going to work. Remember, we retired some of that mortgage debt already. We bought back and sold off the mortgage securities that we bought. They have a system. The New York Fed has been drilling on this for the last 6 months. he feels that they'll be able to slowly raise rates and not have a hard landing. He's convinced of it, and he's not going to make his case tomorrow, but he's going to try.
I will tell you this, that those viewers who just heard Toby Smith say that, and if they believe that you have a direct connection to the Fed's outlook, you're going that sell-off, that going short, that period is now upon us.
Yes.
As soon as the Fed chairman speaks. Do you disagree, Harvey?
Yeah, of course. I mean, this is going to be political pablum as usual. This guy gets it. If you read Greenspan's book, he says the Fed is influenced politically. I mean, you've got to deal with a presidential election coming up. You've got to deal with the fact that this guy has pulled off one of the great trades of all time in perception, not reality.
Right.
Toby's 100% right. The market's talking about 6 to 9 months out.
And tonight, I want to just very quickly, we have about 10 seconds left for each of you. Should investors be a buyer in equities here?
Oh, sure. But the market's now overbought. And when he talks tomorrow, whatever the reaction is after he speaks, up or down, the following day, it will be the opposite. How's that?
Okay. I think that's, it sounds like sound counsel to me. You're the expert, Toby. What do you think?
Well, here's what I'm buying stuff that people hate. People still hate banks right now. We have a company we love, Bank of the Ozarks. They're buying FDIC, taking over banks, adding value to them. There's always going to be something available, and particularly when people hate something. If people hate banks, there's going to be opportunity in banks.
Fear, greed, and hate. I like it. Toby, thanks so much. Harvey, thank you.
Good to see you.
We want to make sure you tune in.